Which prop firm is the best? This is the question you are asking yourself because you've seen many influencers and YouTubers making tens of thousands of dollars, and you want to get funded and start making tens of thousands of dollars yourself. Stop for a second. Take a deep breath and think. Give yourself an honest evaluation. Do you have a strategy? Have you done months of backtesting, proving your strategy is profitable? Have you done months of forward testing in a paper account? Do you know your personal trading flaws and have you worked on them? Have you been journaling and recording your results in both your trading and personal development? These things that I've listed are the foundation of every successful, long-lasting trader. But also, have you asked yourself whether or not you can afford to lose the money you put into these prop firms? Because even if you have done all these things, there's still a chance you end up failing the challenge and just giving your hard-earned money to the prop firm. Yes, that's still a possibility, and I encourage you to take a step back and take a good hard look at yourself and be honest on where you are at in your trading journey, because you may still have some things you need to work on. Failing a prop firm challenge will not only cause financial damage, but significant mental damage that could set you way back on your trading journey. I say these things to you not to frighten you, but to prepare you. I want you to be fully prepared so that you can give yourself the highest probability to succeed in these prop firms. Now, assuming you are fully prepared and have accepted both the monetary and mental risks, we can talk about which prop firms is the best, or more importantly, which one is the best for you. With a little bit of research, you'll find out that there are tons of prop firms out there, each viable in their own way. So it's important that you understand yourself and the way you trade when selecting a prop firm challenge to go with. But for myself and for this video, I'll be taking a look at the big 3 prop firms that you may or may not have heard about. Those 3 are Topstep, Apex, and My Funded Futures. What to look for when choosing a prop firm. Now, I'm not going to go into the background or history of each prop firm, but I will be taking a look at the available platforms that they offer, the cost, which is going to be the evaluation fees, resets, any activation fees, or data fees. I'll also take a look at how difficult it is to pass the evaluation, taking a look at the profit target you need to reach, what is the max drawdown that they allow for you, and any additional rules that they put on you. Once you pass the evaluation phase, I want to take a look at not only the profit splits, but also any additional rules and conditions they put on you that wasn't there during the evaluation phase, because they can actually make it harder for you to receive a payout than passing the evaluation. Here are the available platforms that Topstep offers. You can see that they have the most variety, and they even have their own Topstep X. This is their proprietary platform. But they offer all of these. So if you have a specific platform that you love and you just can't get away from, for example, if you love using Sierra Chart and you just can't get away from it, then Topstep could be an option for you, because some of the other firms, they don't offer all of these. Apex has the fewest options, but if you're okay using Rhythmic, Tradeovate, or NinjaTraders, those are available. And here are the available platforms for My Funded Futures. And you can see that they do offer Sierra Chart. So as I mentioned before, if you love Sierra Chart, this will be an option for you as well. And you can see that they have TradingView listed here. Now I believe you can use Tradeovate and import that into TradingView and use the TradingView platform. So the other firms that offer Tradeovate, you may be able to use TradingView with those as well, but I would suggest looking into it yourself if that's something you're wanting to do. Now let's take a look at the accounts of each firm and their costs. So for Topstep, they offer a $50,000, a $100,000, and a $150,000 account. You can also have a maximum number of 3 accounts with them. For Apex, they have listed Rhythmic and Tradeovate, so depending on the platform that you use, they have different prices. They offer a variety of account sizes, anywhere from $25,000 to $300,000, and they also have a $100,000 static. Now, in order to be able to compare to the other 2 firms, I will be only taking a look at the $50,000, the $100K, and the $150K accounts, just for comparison, but note that they do have other options if you're looking into it. Also, they offer the maximum number of 20 accounts with them, so that is going to be the most between these three firms. For my fund of futures, they have a starter account and an expert account, and we have to divide this up because they are drastically different from each other. But for both of these types, they do offer a size of 50K, 100K, and 150K. Now, the maximum account size of 10 has a question mark because if you look at the website, on the main page, they do say they offer a maximum of 10 active accounts with them. But then when you go to the FAQs, you can see that they say you can only have a total of 3 simulated funded accounts. That's going to be the account type after the evaluation, and a 1 live funded account concurrently. And that's going to be an account with live funds. So it looks like you may only be able to have a total of 4 or maybe just 3. I'm not exactly sure. They're not very clear about this. So moving forward with this, I'm just going to put at least 3 for my funded futures, but I would suggest you looking into it if you want to open a lot of accounts with them. Now going back to Topstep, we take a look at the monthly evaluation fee. So for each different size, there is a different cost. So for the 50K is $49, for the 100K is $99, and $149 for the 150K account. The reset fee is going to be the same price as the monthly evaluation fee. And once you pass the evaluation phase and you go to a funded account, then they have a one-time activation fee of $149. And here is the pathway that you'll be going through. You'll start with an evaluation, and once you pass, you'll go into what they call a express account. And then you may be put into a live funded account if they see that you're consistent enough and you have no choice. You must go into a live funded account, and once you're there, you are responsible for the live funded data fee, which is going to be at least $135 per month per exchange. So if you take a look at the chart here, each exchange, if you want the data for these, is going to cost you $135 per month. Now for me, I'm only going to be trading the futures indexes, so that's going to be the ES and the NASDAQ, and this is going to just be a total of $135 per month if I go into a live funded account. Also take a note that they do say if you use Tradeovate, the fees could be a little bit larger, but they don't give specifics on that. Now going to Apex, we see that the monthly evaluation fee. Now from this point forward, I'm just going to use Rhythmic because the Tradeovate fees is basically going to be $20 more per fee. So for the monthly evaluation fee, add $20 to these numbers to get the Tradeovate. And then for the reset fee, add $20. For the activation fee, add $20. So every single fee, add $20 to get the Tradeovate number. But from now on, I will be using the cheaper option, which is Rhythmic. For the 50K, it's going to cost you $167, $207 per month for the 100K account, $297 for the 150K, $80 for a reset fee, and they have a choice on the activation fee. You can either pay $85 per month. Now remember, this is just for the Rhythmic. For a Tradeovate, you got to add $20 to this, or you can pay a one-time lifetime fee, $140 for the 50K, $220 for the 100K, or $260 for the 150K. As you can see, the $85 is cheaper for the first month, but if you don't blow your account and you end up keeping the account for more than 2 or 3 months, then the lifetime fee will be a better option. Take a note that the level 1 data is included, but if you want level 2 data, you got to purchase that through Rhythmic or Tradeovate. They don't actually offer it themselves. Now looking at my funded futures, the monthly evaluation fee is going to be $100 for the starter, and that's going to be a 50K, $200 for the 100K, and $300 for the 150K, and that's just going to be the starter account. For the expert account, it's going to be $165, $265, and $375. Now I want to take a moment that at the time of this video, for the starter accounts, I was able to see that they offered a 30% discount across the board, but that's only for the starter. I didn't see any discount for the expert account. Now for futures prop firms, they have discounts and they have sales all the time, so I encourage you to go look around to see if you can find any discount so that these prices aren't really going to be reflected, but I'm using the original cost because I'm not sure if whether or not these sales will be available to you by the time you watch this video. Now I do want to mention, if you look at Topstep, they have a higher price that is marked out, and you'll see that these are going to be the new lower prices. Now I'm using these because I know for a fact that Topstep are using these prices as a permanent price going forward, at least at the time of this video. Anything could change in the future, but that is why I'm using these low prices for Topstep, but I'm sticking with the retail price for my funded futures because I'm not sure if this discount will be available in the future for you. Continuing on, we have the reset fee. It's going to be a flat $100 for any of the starter accounts. So even if you go with a 150K, you only need to pay $100 in order to do a reset. For the expert account, it's going to be like Topstep. It's going to be the same price you pay for the monthly evaluation fee. And then once you pass the evaluation, there is a one-time activation fee only for the starter account of $149. If you have the expert account, they waive the fee, so there's no activation fee for that. Also, level 1 data is included, and if you want level 2 data, it's going to cost you $39 for a non-professional license, and if you're a professional, then it's going to be $124. Now that's a lot of numbers to wrap your head around, but let's go ahead and put it into a spreadsheet. Now here are a lot of numbers on the screen, but don't be scared. This is a time to turn your brain on, and let's take a look at the key differences that each firm offers, and we'll start with Topstep. You can see that the first difference that we see is that Topstep is the only firm that has a daily loss limit, meaning that if you go below this amount on the day, then your account freezes, you're not going to be able to trade anymore, and you have to stop for the rest of the day. Even though you did not hit your trailing drawdown, they're going to freeze your account and you won't be able to trade anymore. So this may be a hindrance if you're a high-risk trader. But pretty much across the board, you can see that the profit target is going to be around 6%. We note that my funded futures is a little bit different, but we'll get that once we talk about that firm. Let's continue on with Topstep. We can see that the profit target is going to be 6%, and the trailing drawdown is around 3 to 4%. Using these values for the costs, if we pass the evaluation with no resets, these are going to be the costs, and you can see that for the 100K account, it will be the cheapest option. And then after that, these two rows are going to take into account if you have 1 or 2 resets, and the last 2 rows is going to be if you take more than 1 month. So assuming you take 2 months to pass with no reset, or 2 months to pass with 1 reset, these are going to be the costs. And as you can see, these are all in green, meaning that these are going to be the cheapest option for that account size across these 3 firms. The last thing I want to talk about for Topstep is that we have the minimum trading days here, and I put it as 2. Now technically, Topstep does not have a minimum trading day rule. However, they do have what they call a 50% consistency rule. And what that just means is no more than 50% of your total profit can come from a single day of trading. So for them, the fastest you can pass their evaluation is if you make 50% of the profit target on one day and then 50% of the profit target on another day. So then you reach your profit target and you pass without breaking their 50% consistency rule. So that's why I have a minimum trading day of 2 here. But keep in mind that this is actually going to be reflective of the 50% consistency rule. Moving on to Apex. Now remember, we're just using the arithmetic costs here. And you'll notice that it does have the same profit target as Topstep. There is no daily loss limit. And you can see that the trailing drawdown for the 50K and 150K account is actually $500 more. They give you more of a drawdown for these account types, meaning you have more leeway before you blow the evaluation. Also, I want to mention for the position size, the numbers in the parentheses are going to be the maximum number of contracts you can use for trading micros. Now for Topstep, you can see that we don't have that. Their position size is the same. So maximum 5 contracts if you want to trade minis, or maximum 5 contracts if you want to trade micros. It doesn't matter. But for Apex, they actually have a micro scaling. So you can do 10 contracts in the minis, or you can do 100 contracts in the micros. So I mentioned earlier you do have that extra $500 trailing drawdown, and that's reflective here. When you take the profit target and the drawdown, you see the ratio is the smallest for their 50K account, meaning that this account is the easiest to pass. You have to hit 6% before reaching your 5% trailing drawdown. So that is almost a 1-to-1 ratio. Whereas most of the other firms, you can see it's going to be about 2-to-1. So you need to make 2 times as much before you hit that trailing drawdown of 1 before blowing your account. Coming down to the totals, when you add the numbers up, they do end up being the most expensive with the upfront cost. So if you pass the evaluation with no resets, they are the most expensive. But if you have to do some resets, their resets are relatively cheap compared to the other firms. So that end up being a little bit better than the other firms if you have to do resets. But if you have to take more time to pass the challenge, it does end up being more pricey. Last thing I want to talk about is that you'll see that they have 7 days minimum trading days. So you do have to trade for 7 days before you're able to pass the evaluation. And they also have intraday trailing drawdown. The difference between intraday and end of day trailing drawdown is that the intraday trailing drawdown will take the highest account value while you're still in a trade. So let's take the 50K for example. Let's say we haven't started yet. We have $50,000 in our account. We enter in a trade and we gain a profit of $2,000, but we don't close our position. We wait. And as we're waiting, our account profit goes down to 51,000. So it was at 52, now it's at 51, and we decide to close our position, so we're $1,000 on the day. Now, with the intraday trailing drawdown, it will count that 52,000 because that was our highest account value while we're still in the trade, and use that to calculate our trailing drawdown. So 52,000 minus 2,500, so we cannot have our account below 49,500. Now if it was end of day trailing drawdown and the same scenario happens, it will use that 51,000 as our maximum for the trailing drawdown. So then 51,000 minus 2,500, so our account cannot go below 48,500. So that is just something to be aware of. Now moving on to the My Funded Futures, we do have to separate it out between the starter account and the expert account because they are pretty different from each other. But we'll talk about both of them at the same time. As you can see, the expert account has the highest profit target out of all the firms. All the firms are going to make you hit a 6% target, whereas the expert account, you need to hit a 8% target. This is a whole 1/3 more than what you have to make with the other evaluations to pass. And you can see the expert account, the drawdown is the same as the starter and same for Topstep as well. So if we look at the profit drawdown ratio here, we can conclude that the 100K and the 150K account for the expert account is the most difficult to pass the evaluation, but the 50K is going to be aligned with the same difficulty as the Topstep 100 and the Topstep 150. And as I mentioned before, the activation fee is waived for the expert account, but you can see the monthly evaluation cost is slightly higher compared to some of the other firms, and that's where they're going to be making up their costs. Taking a look at the total numbers here, if you go with the 50K or 150K account and you pass with no resets, they actually end up being the cheapest options because of that waived activation fee. However, if you go with resets, they have one of the most expensive resets, and that will definitely drive up the price, so you end up being more pricey than the other firms. And if you take 2 months to complete, well, the price ends up being okay compared to the other firms. Won't be as expensive as Apex, but it won't be as cheap as Topstep. And both of them only have a minimum trading day of 1, so you gotta trade at least 1 day, but there is no limitation on how many days you need to pass the evaluation. And one last reminder, don't forget to look for sales and discounts because all these numbers and comparisons could change depending on what price you're actually able to find. Now let's take a look at how difficult it is to pass the evaluation for each firm and what rules they implement. For Topstep, you gotta hit a profit target of 6%. They have the 50% consistency rule that I mentioned before, and combining that with the daily loss limit, this is going to limit the high risk trader. So if you're risking a lot to make a lot, this is going to be a limitation on you. Now, the daily loss limit is only 2%, so if you have good risk management where you're not risking more than 2% on the day, so for example, you're risking 1% on trade, let's say you take a loss, you can risk another 1% before you're done for the day with that daily loss limit. And also you want to keep your winnings under 50% of the total profit target. That way you won't be breaking that consistency rule and you can pass without any problems. Also, all your trades have to be closed by 4:10 Eastern Standard Time, so you're not allowed to hold any trades overnight. Comparing that with Apex, you have the same profit target. You do have different sizing, but I'm not really going to see this as a big difference. Now, Apex does have that intraday trailing drawdown that I mentioned before. Also, the max trail is to the profit target, so it's not going to stop at the initial account balance. So let's say you have a 50K account, the trailing is not going to stop at 50K. It'll keep going until you reach your profit target. Whereas Topstep, the trailing drawdown will stop at the initial account balance. So for 50K, if you get yourself up to, let's say, 52,000, the trailing should stop at 50,000 and won't go above that from that point on. But for Apex, it'll keep going until you hit your profit target. Also, you gotta close your trade, but they give you a little bit more time. You have to close your trade by 4:59 Eastern Time, or depending on which market you're trading, you have to close your trade out before market close. And I mentioned before, you have to have a minimum of 7 trading days before you're able to pass the evaluation. Now for MyFunded Futures, the starter account profit target is 6%, just like the others, but the expert account is 8%, so that is a full 2% more, or 1/3 more than you need to make for the other accounts. Also, there is micro scaling for the starter, but not for the expert. But besides that, there are really no other rules for MyFunded Futures. Now let's talk about everybody's favorite topic, the payouts. But as I mentioned before, once you get past the evaluation phase and you move to the funded stage, they may tag on additional rules, so getting a payout could be harder than passing the evaluation. But let's go ahead and take a look. Once you're in the Topstep Express account, they do offer 100% of the payout up to $10,000, and then after that it's going to be a 90-10 split where they keep 10% of your profits. Now, in order for you to get your profits, you need to have 5 winning days, not 5 trading days, winning days. And how they define winning days is any day where you are profitable at $200 or more. And those are going to be between payouts. So if you take a payout, then you need 5 more winning days in order for you to be eligible for another payout. And when you take a payout, you're only eligible to take out 50% of the profits. Now, once you have 30 winning days, you do have access to 100% of your profits. Now, the only caveat here is I wasn't sure if it has to be 30 winning days before you take a payout. So in between payouts, do you have to have 30 winning days, or does the 30 winning days accumulate across payouts? So that's something I would encourage you to look into. I wasn't able to get clarification myself. But after 30 winning days, you are eligible to take 100% of your payouts, although if you do take 100%, then you have to close the account. You can only take 4 payouts per month, and each payout request has to be a minimum of $125, which isn't very much. After you take a payout, the maximum drawdown you have is going to be set to $0, meaning that you cannot go below the initial account balance. So for example, let's say you have a 50K account and you get up to $52,000, you've had 5 winning days, and you decide to request $1,000. So now your account has $51,000. The max loss is going to be set at 0, so you cannot go below $50,000. So you only have $1,000 of drawdown before you blow your account. But one good thing about Topstep is once you are funded, they take away that consistency rule. So you don't have that consistency rule anymore. You could have one day where you catch a big runner, and then the other winning days could just be the minimum $200, and then you're good to go for a payout request. And as I mentioned before, If you get moved to a live funded account, it's going to cost $135 per month for the exchange fee. For Apex, you get 100% of the profits up to $25,000, so they do give you a little bit more. And then after that, you go to a 90-10 split, just like Topstep. They require you to have 10 trading days. These aren't going to be the winning days that Topstep have. These just require you to be trading, but you're required to have 10 days of trading before you're eligible for a payout request. Now they do have a minimum balance requirement, and you can see here on screen. So for the 50K account, you need to have a minimum balance of $52,600, which is going to be about 5.2% of the account. And then for 100K and 150K are seen here. This is going to be similar to Topstep, where they only allow you to take 50% of your profits. So they want you to have some sort of buffer to prevent you from blowing up your account. Now this could be a hindrance because you actually need to make more money than you originally thought in order to be able to request for a payout. So keep that in mind. Apex have certain payout dates, so you have to request the payout between the 1st and the 5th of the month or the 15th and 20th of the month. You can have a maximum of 2 payout requests per month, and that's due to the 10 trading day requirement. Every payout request has to be a minimum of $500. In the first 3 months that you're requesting a payout, they limit you to the amount of payout that you can request. Here you can see that for a 50K account, the maximum you can withdraw is $2,000. This is only going to apply for the first 3 months that you're requesting payout. So let's say the first 2 months you request a payout, but then the 3rd month you decide not to take any payout. Then month 4, that's still going to be your 3rd month payout month. So you're also limited to $2,000 if you have that 50K account. It's $2,500 for a 100K account and $2,750 for a 150K account. But after your first 3 payout months, then you won't have this maximum limit anymore. Your max loss limit is going to be set at $100. Now that's going to be $100 more than the initial account balance. So for a 50K account, that's going to be $50,100. So you're not allowed to go below $50,100, or else they will consider that as blowing your account. And keep in mind, you do have that minimum balance requirement when you request a payout, so you do have some buffer after a payout. Additionally, after the evaluation, they drop a 30% consistency rule. So 30% of your profits cannot come from one single day. Now that is quite limiting because you are limited from being able to catch a big runner one single day. Now, if you break this rule, your account doesn't get terminated. It's just that you have to keep trading until you meet this consistency rule. They also have a 20% flipping rule. Now, I wasn't able to get too much clarification on what they mean by flipping. Is it being able to go long and then flip short? Or is it just go in and out of trades very quickly just to have a trading day being counted? Wasn't able to get clarification, so I suggest that you look into it if you're going to go with Apex, but they do have a 20% flipping rule that you're not allowed to break. Now, if you don't meet this rule, same with the consistency rule. You just keep trading until you do meet this condition. The last 2 rules I'll be going over is that you cannot trade during news. Now, they don't go over specifically how long before and after a news release you can be trading, or what specific news you are allowed to or not allowed to trade. So they don't go too much into detail on that, but I would highly encourage you to look into it yourself if you're going to go with Apex. So another big deal with a lot of other firms is that they have a no automated trading rule. They want the trader to be at the computer, monitoring and managing the trade themselves. They don't want to have an automated trading system. And breaking either of these 2 rules could lead to forfeiture of your profits and closure of your accounts. So it's important to not violate these 2 rules. Moving on to my funded futures, it's going to be similar to Topstep, where you get 100% up to the first $10,000 and then a 90-10 split after that. Now, the minimum payout request is $1,000. This is going to be the highest among these 3 firms. They do have a lifespan account closure policy, And what this means is that if your account is under 45 calendar days, then you can only receive 20% of your total profits. If it's between 46 to 90 calendar days, you can receive up to 50% of your profits. But after 90 days, you can receive 90% of your total account. And that's going to correlate to that 90-10 split. Now remember, there's no trading day requirement. So if you do want to take out 90% of your account, you can just wait the 90 days and sit on the account until you pass the 90-day limit, and then you can request all of that out of your account and close your account. Same as Apex, the max loss limit is set at $100, so remember that's going to be a $100 above the initial balance. They also have a no trading news policy, and they specify this to be 2 minutes before and 2 minutes after the news. You are not allowed to have a position open or any orders during that time frame. Also, same with Apex, no automated trading for MyFunded Futures as well. They also have a buffer zone policy where you're allowed to draw 60% of your account if you're in that buffer zone. Now the buffer zone is kind of like when I talk about Apex, you have to have that minimum account requirement, which is going to be the maximum drawdown added above the initial account balance, and that's going to be your buffer zone. If you're in that buffer zone, you can still withdraw, unlike Apex where you have to meet that minimum account balance. With MyFunded Futures, you're actually able to withdraw, but only up to 60% if you're in the buffer zone. Now for the starter account, there are some additional conditions. First being the max payouts. So you're only allowed to request a payout of $2,000 for the 50K account, $3,000 for the 100K account, and $4,500 for the 150K account. But after 60 days, this goes away and you won't have that limit anymore. But for the first 60 days, you are limited on how much you can actually draw out. Also, for the starter account, they tag on a 40% consistency rule. So no more than 40% of your profit can come from one single trading day for a payout request. Lastly, for the starter account, you are constricted with a scaling plan. And as you can see here, depending on your account size, these are going to be the account trick size that you're allowed to do if you're in this profit range. So let's say you have a 50K account. Well, you are below 1500 profit to start. So you're only allowed to take either 2 minis or up to 20 micros. But as you make more and more profit, they allow you to take larger size in your position. So keep in mind that the starter account, you do have to adhere to their scaling plan. So which prop firm is best for you? As you can see, each prop firm operates relatively the same in concept, but each one have a different set of rules and parameters that must be met in order to pass their evaluation and be eligible to take a payout. I spent a lot of time and effort researching and comparing these prop firms to give you a broad overview of their key differences. So before I go into it, I just want to ask, if you should so feel inclined, please consider giving this video a like and subscribing to my channel. I really appreciate the encouragement and it will really help my channel grow. Thank you. Now, because each prop firm have different things to offer, the answer to this question is, it depends. I know, it's cliche, but it really does depend on what you're looking for, what you can afford, and whether their conditions synergizes with your trading style. So I can't answer this question for everyone, but I can certainly answer for myself. And I'll break it down for you in the different categories that we looked at. So how do I rank these prop firms in terms of cost? Well, from the cost comparison spreadsheet, it should be no surprise that Topstep comes in first overall cheapest, especially if I end up in a sticky situation where I need to do a reset, or if the evaluation takes more than 1 month. MyFunded Futures comes in second, but also know that I didn't account for any sales or discounted prices. So if you look into it yourself, you may find a cheaper price than even Topstep. I don't know, but based off the prices I used, MyFunded Futures ended up with the median cost. It's also important to note that the expert account had the most expensive resets, so failing that challenge will hurt the most. But if I'm able to pass in the first month without a reset, the 50K and 150K accounts ended up being cheaper than Topstep, since the expert account waives the activation fee. And of course, Apex has the most expensive upfront cost, and it's just more expensive than the MyFundedFutures starter account across the board. But it does have potential to be cheaper than the MyFundedFutures expert account if you need to pay for resets, as it does have relatively cheap reset costs, especially for the 100K and 150K account. Also remember, I was only looking at the cost for using Rhythmic, so if you're using TraderVate with Apex, it will be a little bit more expensive. So how do I rank these prop firms in terms of how easy or hard it is to pass the evaluation phase? Well, actually, it's not so easy, as there's not just one single metric I can use to determine this. This category will be a little bit more subjective, but I'll talk through my reasoning and see if you agree with me or not. I'm going to have to give the gold to Topstep and MyFundedFutures starter account only. They both have the same profit target of 6% and trailing drawdown of 3 to 4%. The two differences are that Topstep has a daily loss limit and 50% consistency rule, whereas the starter account does not have either. This makes it sound like Topstep is harder, but so why am I giving first place to both of them? Well, the daily loss limit is 2%, which I think is reasonable for any trader with good risk management. So I don't actually feel this rule is a hindrance. Now, if you're a high-risk trader, then yeah, MyFundedFutures starter account would be the better option, but that's not me. The 50% consistency rule is technically a hindrance in that you're not able to pass a challenge in just one day. However, I think that's unrealistic for me. Now, suppose I'm using 1% risk per trade. That will allow me 2 losing trades on the day before hitting that daily loss limit. With 1% risk and the 50% consistency rule, my maximum profit in order to be optimal should be 3%, meaning my one winning trade on the day needs to be a 3 to 1 reward to risk ratio, which is already on the high end for me. Most of my wins are between 1 to 1 and 2 to 1. If there's no consistency rule and I want to pass the evaluation in one trade using 1% risk, then I need to have a 6 to 1 reward to risk. This is not realistic for my trading style, but if you're a high risk trader, then I could definitely see this rule being a hindrance to you, and going with the starter account could be a better option. But for me, these rules just simply don't obstruct my trading. So if I ignore them, then passing the Topstep evaluation has the same parameters as passing the MyFundedFutures starter evaluation. So they both rank first in my eyes. I'm going to have to put Apex in second, with the caveat of quote unquote for momentum traders. Now, I don't want to define momentum traders, but what I mean is the trading style where you're entering as the market is moving in your favor, and then also exiting while the market is still moving in your favor. Or you have the style where you're quickly and aggressively moving your stop loss towards your TP, and you don't want to sit through any retracement. I hope that gives you a good idea of what I'm talking about when I say momentum trader. And this is because Apex has that intraday trailing stop loss. Any retracement is going to eat up your trailing drawdown, even if you're in profit for the day. So I think the trading styles that won't get affected by this rule are the ones that aggressively move their stop loss so they don't sit through much retracement, or scalpers that take quick moves in the market. But note that the drawdown is trailing based off your account's highest equity. So not every retracement will eat up the drawdown, but if you reach an account high, then it will. Now that sounds like a lot of negative for Apex over just one rule, but depending on your trading style, this rule might not even affect you, just like how I don't think Topstep's 50% consistency rule will affect me. Now onto a positive point, Apex does give you the most allowable drawdown for their 50K and 150K accounts, $500 more than Topstep or MyFundedFutures, making their challenges the easiest to pass if solely talking about hitting the profit target before the allowable drawdown, as you have $500 extra of leeway. Also note, I only looked at the 50, 100, and 150K accounts for Apex, but they offer many different account sizes, so I encourage you to investigate them yourself if you're wanting a different account size than the ones I looked at. The one condition for Apex, though, that may or may not be concerned to you is that their challenge requires 7 trading days. They don't have to all be winning days, They just want to see at least 7 days of trading, regardless if it was a winning day or a losing day. As long as you have 7 days under your belt and you hit the profit target before hitting the trailing drawdown, you can pass. This 7 days rule aligns with Apex's ideology of wanting traders to be consistent and predictable, with small to moderate wins rather than having traders who have a high reward to risk ratio but also a relatively low winning percentage. So that's the kind of trading style that would synergize best with this prop firm. Okay, so even though the My Funded Futures starter account tied for first, I have to put the expert account in last. It was kind of a tough call between the expert account and Apex, since Apex had a lot more conditions, but when I really thought about it, it's because Apex is looking for a particular style of trading, and with that style, the extra rules would not really matter, and they would benefit from the added drawdown that they offer for the 50K and 150K accounts. Now once I realized that, I just had to put the expert account in last, even though there's very little rules for the expert account evaluation. It just simply boiled down to the raw numbers. All the other accounts had a 6% profit target with an allowable drawdown of 3 to 4%. Apex having a little bit more, but the expert account requires an 8% profit target with that same 3 to 4% drawdown. It may not seem that big, but it's a full 1/3 or 33% more than what you have to make to pass the other evaluations with the same trailing drawdown. So passing the expert evaluation is the most difficult, but if you're a consistently profitable trader, then it's definitely doable. It just may take longer than the other challenges, but that also gives you more chances to make mistakes and have losing trades while trying to reach for that higher target profit. Now let's talk about payouts. Once you've passed the evaluation, which firm provides the best payout structure? The My Funded Futures Expert account is the hardest to pass, but once you do, they reward you with the best payout structure, at least in my opinion. But I'm not saying it's perfect, and many parameters are similar across these firms, but I will highlight the key differences. The biggest benefit to the expert account payout is that there are no trading day requirements. You're not restricted to winning trades or trading a certain number of days before you're allowed to take a payout. As long as you're in profit, you can request a payout. Now there are two restrictions for My Funded Futures that I want to talk about, and it applies to both the starter and the expert account. First is the minimum payout is $1,000, which is the highest among these firms, but $1,000 is 2%. Which I think is a reasonable target, and if I'm going to be taking a payout, I would want to take at least $1,000 anyways, so I don't see this as too much of a barrier. The second restriction, which kinda also applies to all the other firms, is having a buffer zone, and that buffer zone needs to be equal to the max drawdown, but it has to be above the initial balance. So technically, for the expert account, you are allowed to withdraw 60% while you're in the buffer zone, but that also increases the risk of you blowing the account. So if you're consistently profitable, be patient. Once you build up a cushion, then start taking payouts. So unless the minimum payout request of $1,000 is an issue for you, I think the zero trading day rule for the expert account is a huge advantage. Topstep comes in second with a lot of benefits, but one big downside. The minimum payout request is only $125, which is the lowest of these firms. Ideally, you'll be requesting more, but with such a low amount, you can start recovering from the evaluation costs sooner. Make sure you build up a buffer because after requesting a payout, the max loss will be set at the initial balance, so you're not allowed to go below that amount. This is also the max loss limit for the other firms, but they tag on an extra $100. Which isn't a lot, but it is more than what Topstep offers. But the biggest benefit Topstep offers once you pass the evaluation is that they remove that 50% consistency rule. So you don't have that rule anymore. They actually make it easier for you after you pass the evaluation. Now, the one big downside to Topstep is that you are required to have 5 winning days, not trading days, winning days, before you can request a payout. And you can only request 50% of your profits. In order for you to have access to 100% of your profits, you need to have 30 winning days, not trading days, winning days. Remember, they define a winning day as a trading day where you make $200 or more in profits between payouts. So with that definition, remember I wasn't able to confirm if you need 30 winning days without requesting a payout in order for you to have access to 100% of your profits, or if the 30 days is cumulative across payouts. I wasn't able to get clarification myself, but I encourage you to look into it if this is a concern for you. So in my opinion, Apex and the My Funded Futures starter account comes in third place due to two major restrictions. Firstly, these are the only two with consistency rules once you pass the evaluation, 30% for Apex and 40% for the starter account. As I've said before, consistency rules limit traders on being able to catch the days where the market really runs in your favor. So that's a big downside for me. Secondly, both these accounts restrict the maximum payout you can request, similar to Topstep, but rather than being a percentage base, it's solely restricted by a certain dollar amount. Topstep's payout request is restricted to 50%, but if you make more, you can take out more. It's not limited to a particular dollar amount, so it doesn't actually have a hard cap on it. Apex in the starter account has a hard cap on how much traders can request for a payout, at least for the first 3 payout months for Apex and the first 60 days for the starter account. They both add additional rules at the funded stage, but this hard cap is by far the biggest negative to their payout structure. So, after all the research and seeing what each prop firm has to offer, which one will I go with? All three of these are viable and have their own unique things to offer. It's just a matter of deciding which one fits best for you. And for me, I think Topstep is going to fit me the best. I'm at the point in my trading journey where I've done my testing and I'm just getting started with trading with real money. And I believe Topstep fits the beginner trader because of their low price point. This puts less pressure on failing a challenge and having to reset. Although I don't plan on failing, I recognize that it's still a possibility. Apex is one of the more expensive options, and they seem to be looking for more consistent and experienced traders. They do allow the most number of accounts, so perhaps in the future, once I have more experience under my belt, I'll be looking to open accounts with Apex. My Funded Futures would actually be my second choice. I will want to use Topstep as a starting point, and once I'm able to take a few payouts, then I will go with My Funded Futures Expert account only. I like how the Expert account doesn't have many rules and conditions added on, similar to Topstep, and if I'm able to pass the evaluation without a reset, because of the waived activation fee, that will actually make it cheaper than the starter account. Thank you so much for watching this video. I hope you got something out of it, and you can show me some love by giving this video a like. And before I let you go, I'd just like to say that there are many prop firms out there. These are the only 3 that I decided to dive into, and I encourage you all to look into whichever prop firm catches your eye. Who knows, you may find one better than any of these options and will be just the perfect fit for you. Also, let me know in the comments if there is another prop firm you want me to cover. The one with the most likes, I'll do a future video on them and compare it to these 3 as well. But until then, good luck trading.